so-called technical analysis. And technical analysis is this kind of gibberish. I kind of think of it as voodoo, sort of as more or less been debunked as a technique. It's sort of this voodoo. It's up there with me in astrology trading or rolling dice. Dice rolling, these are techniques that you should not use. And technical analysis is one of them. Technical analysis. And this was an old method used a long time ago that, again, is largely gone. And it basically says that if you, actually let me show you. If you look at a stock chart, it's kind of silly. If you look at a stock chart, you could actually try and predict movement by drawing these lines, these kind of, show you, trend lines, these different trend lines, and I don't know exactly how to do it, but this trend line might tell you something about the future of the stock price movement, and like you could call this a downtrend, if you will. And this is a resistance line, and you can see that the stock market is right at this resistance line, and if it goes above this resistance line, it'll go above even faster or something. And all this, I think, is nonsense. And the reason that I think this is nonsense is that if you look at real mathematical approaches and you think about efficient markets, here's a real algorithm. This is called the Baum-Welch algorithm, and it's used to it's a Bayesian algorithm that's used to impute different hidden Markov model attributes. So if you want to look into that, if you want to take sort of a systematic approach to finance, that's a desirable thing to want to do. You want to sort of distill finance into rules and trading into rules. This is not a reliable rule, and you can actually do something in quantitative testing called backtesting. Backtesting. And what you'll find is if you backtest technical analysis across a large array of data, that it doesn't work. It doesn't work. In fact, a lot of algorithms tend to stop working when people discover that they work. So this concept is efficient markets or no arbitrage concept. So if something as simple as drawing lines, no arbitrage, if something as simple as drawing lines on a stock chart was enough to predict their future, if something would go up and down based on some drawings of lines, I mean, that would be a real silly kind of thing, right? I mean, it kind of seems quite silly. And I have a friend who says that his technical analysis toolkit, this is pretty funny, he calls this his technical analysis toolkit. Let's see if there's a picture of it. He has a very funny photograph of it. All right, these are all, this is a funny one, I guess. But his looks like this. It's a, he gave someone Crayola crayons as his technical analysis toolkit because it reminded him of drawing lines on a stock chart to trade millions of dollars seemed like a pretty funny thing to do, and it certainly seems that way to me. So in any event, that's sort of he gave someone a box of Crayola crayons and put a Post-it on it and said, "This is your technical analysis toolkit." So I think that's a pretty funny thing there. So anyway, I think quantitative finance has kind of eclipsed technical analysis, and these complicated algorithms seem to work pretty well. At least the funds that employ them seem to do well, and the technical analysis line drawing doesn't really tell us very much of anything. So in any event, that's enough for the of the lesson. Let's get into our sector stuff. So I'm going to kind of segment this even further. I know we were doing software or internet. So we're going to do this as internet/software, and then I'm going to make a sort of semiconductors electronics. So I think they're pretty different. Semiconductors electronics, consumer electronics. No, technical analysis doesn't work because traders use it. No, traders don't use it. Maybe they used to, but most of the world's money is run a different way now. So I'll move some of these, like Intel, Taiwan Semiconductor, and Qualcomm, maybe Samsung. I'll move these over to our other section here. Texas Instruments, Broadcom. These are all kind of semiconductor companies, and they're going to have fundamentally kind of different properties from what we're used to. Cognizant is neither of those. Applied Materials, ARM. These are all semiconductors companies. Very different properties than internet/software companies, which is kind of what we're going to try to focus on. Broadcom, ASM Lithography, NXP, these are all semiconductors. NVIDIA and ADI, definitely semiconductor companies. Oh yeah, I'll make my camera smaller. That's a good idea, thank you. Nobody needs to see my face. There we go. Alright, what else? A couple more of these. So let's look at Twitter. That could be an exciting one. That one jumps out. Everyone knows Twitter. Twitter's ticker, I think, is TWTR, right? These are also semiconductor companies. LinkedIn, do we want to look at that one? Maybe we can vote. What do you guys think? LinkedIn, Twitter. These are well-known companies we all know, right? Expedia. We did a little bit on Alphabet already, so I would say you have choices of Priceline, SoftBank, Baidu, Netflix, JD, Canon and Sony are not software. Let's look at those. I guess we can do a straw poll. Straw poll is fun. Let's see. Straw poll me. Alright, I got a lot of choices. Priceline, that could be good. SoftBank,